The wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. The stage is set, digging deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing the firepower that your financial life may or may not have been missing. And whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a little shot of adrenaline. Now, today we have a thunderous lineup of segments for you all to give you as much information as quickly as possible. As per usual, today we're going to open it up with some open discussion, some live trading, some market analysis for the first 30 minutes or so. Then we're going to bring in a segment called The Week Ahead. So this is going to be the only show for this week. So I want to do a Week Ahead segment where we look ahead at all the news catalysts, things coming up this week, things to keep on your radar going forward for this week. That way you feel prepared and you're ready to go out there and make the best decisions that you can for your portfolio. And finally, a new segment called The Heat Check. So basically this segment is going to look at 3 to 5 names. So today we have 4 that are really hot right now on social media. So there's a lot of buzz around them. People are talking about them and generating a lot of interest. What they are, who they are. 2 of these are fairly big companies. 2 of them you may not have heard of. And what their charts look like. So we're going to look at it from a fundamental, from the hype perspective. And we're also going to look at it as well from the technical perspective. See if there may or may not be an opportunity to potentially invest in some of these names. Toby says, when Spotify of the intro. Hey, I've heard very good things about the intro, and thank you. I made it myself with the help of some AI, but I'm gonna roll out a few more songs as well for the show. So a little segment, little quips and stuff, but I'm glad you guys like it. That's the 3rd compliment on the theme song. It's very catchy. I like it. So anyway, enough of that. Right now, the market, we're sitting at 562.51. Currently down 0.75% on the day. So kind of a start on the Monday here. Now we're going to look out on our daily here. And obviously if you've been watching the program, you know what we're looking for here. We're kind of heading into this area in which if there is going to be a short-term pullback, it would make a lot of logical sense for it to be between today and Wednesday. Wednesday, or at least I should say, and we'll look at this when we talk about the week ahead. The big thing this week is FOMC. That's going to be on Wednesday this week. And also right where we're sitting on this chart, we are in a cluster, as I like to call them here. We'll zoom in a little bit here. We're in a cluster of support and resistance areas. So it's an area in which when you're coming from beneath, it's going to be resistance. When you're coming from above or coming down from above, it will act as an area of support. So we're in this range here, and especially in the last 2 days. We closed on the 30th at 554. And on Friday, we moved all the way up another 12 points on the SPY. So pretty big move. Very gappy here as well. So being in this place, you're also at your golden pocket here for those of you that use fib retracements from that all-time high to that recent tariff low retracement. So it makes a lot of sense here that we're going to find some level of, I don't want to say stability, but I want to say consolidation would make a lot of sense. Another reason here, you got the 200 MA currently sitting at 570.13. And like I said, GP here, and you got about 5 LOIs in this range here. So if you're someone who's more of a day trader, short-term trader, it would behoove you to potentially start the week very slow, especially we're still in the thick of earnings season right now. But if you're someone who trades the market, you may actually have better opportunities looking at either quick intraday moves or maybe being a little closer to the money if you're an options trader, as opposed to someone who may look further out the money. Now, of course, anything can happen. Trump can tweet, whoever can say whatever, and that can obviously impact the way things are sitting at the moment. But for now, we're kind of looking like we're more than likely going to float around in here and wait till Wednesday to actually get some sense of directionality. Now, for me personally, what I'd be looking for is a back test of this 561.89 and 562.63. So this area right here. Not only is that 561.89 your 0.618 retracement, it's also your POC roughly at 561.71, and you have my LOI for support there that was back tested on Friday at 562.63. So a lot of logical reason to sit around this range. In fact, we are in the pre-market right now. We're literally touching that LOI. We're at 562.65 at this moment in time, which is very funny to see that right around Friday's low. So a lot of confluence in this range to get some level of a retracement here to the downside, but nothing that you want to necessarily be chasing aggressively, at least, again, in my opinion. Looking over at the Qs today, similar story here, down a little bit more aggressively than the overall market here, down about 0.88%. On the day, Qs actually tapped their 200 MA on Friday. That number as of Friday was 489.81. You actually wicked above it but closed beneath it. So another area in which you could see some short-term resistance here on your tech names. Now, we did get through the thick of it with some of these tech names with Amazon and Microsoft last week. You're not out of the woods yet, unfortunately. So some of those Mag 7 at least leaning pretty good earnings, at least in my opinion, for all things considered. But we're halfway through earnings season here, and you're at a very treacherous spot, I would say, on the Qs. If you want to be an aggressive bull, I would not just yet. I think there is another case here to back test and get around this range as well, right around this 479.29 area. Would not shock me either. And then lastly, take a look at the IWM. As you guys know, or if you watch the program, I like to use this as my sentiment driver. Kind of gives me an idea of how retail is trading, right? Or how aggressive people are in terms of risk. It's different ways you could look at this, but for IWM specifically, not looking great. It's actually down the most in pre-market here, down 0.93%, currently sitting at 198.62. Right around this red LOI here at 197.26. It tapped and tried to break over its 50 MA on Friday, which would have been nice. That 50 MA level is 198.65. Currently, we're actually right on it on Friday's 50 MA, 198.67 right now in the pre-market. That's going to be a strong area of resistance, at least near term here. Not to mention the 1, 2, 3, 4, 5, 6, 7 green days in a row. Logically makes sense for some level of a pullback. So I would not be uber bullish this morning, especially on a Monday. You want to start the week slow. Let things do what they're going to do. Let pieces fall into their places, especially in your first 30 minutes here, and not chase anything too aggressively, at least in my personal opinion. Currently, we are 5 minutes almost into the open here. I'm sorry, 5 minutes before the open here. I want to take a peek at the VIX as well. VIX is at 24.19 right now. And if you've been watching the program, you'll notice I'll be saying that quite a bit. If you've been watching the program, I wanted to see us back test this 23.09 area, which we did see on Thursday. And actually, we try to break down from that area. We'll zoom in a little bit here. These are daily candles, by the way. Broke down, actually tapped my LOI beneath that 23.09 at 22.40. The low on that what was that, Thursday was 22.34, so pretty close there. Wicking back up and closing above that, and then gapping up a little bit here. I'm sorry, this is Friday. Gapping up here right now as of the open today. So watch that 23.09. If we do see some level of reversal today, so we see the market's already down in pre-market, if we start to grind back up a bit, look at that 23.09 level on the VIX as an area in which you're going to see resistance for the bulls, essentially. If you're a bear on the day, you're going to want to watch right around this 25.14, 25.15 area. You got a wick down here from the 3rd of April, and a lot of price action. My price action, it's the VIX, but you get what I mean here. A lot of, I don't even know what you call it, because it's not technically price action, but a lot of resistance support, I guess, at this 25.15, 25.18 area on the VIX. So if you're bear on the day, that's what you're going to watch. So your range on the day for your volatility, somewhere around that 25.18 to the 23.09. Right now, you're smack dab in the middle around that 24.19, so pretty solid there. Other thing I want you to notice, VVIX is actually under 100. which we'd love to see. We love VVIX under 100. Right now at 97.26. Keep an eye on this today. See if it pops over 100. That could mean some short-term bearishness or uncertainty in the market, or at least in the volatility of volatility. With that being said, if we see VVIX move above 100, but we see VIX start to... If we see the VVIX go up while the VIX is going up, and we see VIX tap that 25, 15-ish area as VVIX is increasing, that could be your sign of a bull side reversal in the market, as volatility is hinting that it would come back down, because the volatility of volatility is increasing, VVIX is going up. Meanwhile, VIX would be theoretically coming down, consequently, because of the fact that as the volatility of volatility increases, that's a sign that volatility could reverse course in either which way. So if you see both of those metrics increase to the upside today and you're a bull, that would be your sign of a potential volatility reversal, which could lend you some help if you're on the bull side of things on the day. 2 minutes here into the open, or until the open. I keep saying into for some reason. Looking at the news for today specifically, you do have PMI services and ISM services PMI at 9:45 and 10 o'clock, so expect some level of potential volatility there. Outside of that, pretty slow day. You have I can't say this guy's name, Bessinet, the U.S. Treasury Secretary. He's speaking at 11, so something could be said there as well. Be mindful of that. And then you got your 3-year and the 6-year at 11:30, nothing there. This is new on my docket. This wasn't here an hour ago. Trump delivers a sports announcement. Whatever that is, 1 o'clock. So, hey, 1 o'clock. Wow, again, all right. So this wasn't here either. Trump signs an executive order today at, what's that, 2 o'clock? 1500 hours, 3 o'clock. And at 3:30, Trump welcomes home a returned citizen. So Trump just decides that he's going to talk at least 3 times today. And he has a MAGA event tonight. Yippee. Love good old-fashioned random volatility. It's nothing better than that. Anyway. Rolling into the open here, we got about 40 seconds. We're literally on this LOI into the open, this 562.63 right now, so it'll be very interesting to see how we open up here. As I prefaced this morning's show, I'd be very, very cautious before getting into this open, especially if you're a day trader. Kind of let IV chill out, see where we're going in terms of volatility, and see if bulls are going to step in this range here between your 0.618 retracement and this LOI. So I wouldn't rush it, but if anything, today more than likely is leaning towards a choppy to slightly bullish day, although we are gapping down in the open, which would obviously give you some semblance of being safe. If you are watching the stream right now, right before, as the market opens, I should say, do me a quick favor, drop a like on the stream, follow me, subscribe, whatever you're doing out there, wherever you're watching me. It helps me very much, and I greatly appreciate your support with the program. Saying that before we get too deep in the weeds here and you're trading and everything, so appreciate it. Anyway, market's open right now, currently sitting right on that LOI and looking like we're trying to push to the upside here. Looking at our pre-market, I wouldn't be too aggressive until you're over this 563.11. That's your recent high in the pre-market, and we've been low all morning. So I would watch this pre-market high as opposed to your pre-market high back here at 4 a.m. to see if we get a reaction, which we're already there. So just if you didn't catch that quick move on the open, do not chase that. I mean, you do whatever you want. I personally would not chase that. I would let this kind of chill out and see where the cards may fall here in a little bit. Right now, tech getting a little bit of a rebound as well. Down 0.78% on the day. We saw that was down 0.88 in the pre-market at the beginning of the stream. Let's see. Where did I mess up? Okay. Yeah, it came right back down. Let's check out our sectors real quick before we get too deep in the weeds here. All sectors are red on the day. Consumer staples, we talked about this before, the least red on the day at 0.14% down on the day so far. Your most lagging sector, your weakest sector at this moment right now is actually energy, interestingly enough, down 1.6% on the day. Other bloody sectors, materials down 0.8. Tech we alluded to, but that's actually not horrible considering everything else, down 0.6. Utilities down 0.7. Financials is just down 1%. That was real quick there. And communication services down 1%. Nothing, not a lot of strength anywhere, actually. Consumer staples is the only thing that's showing, I don't even want to say strength, just not weakness, not as much weakness. And actually tech is getting a rebound in the pre-market, right in the open here. Let's scroll through these real quick. As you can see, utilities down, real estate dropping, materials dropping, industrials trying to turn up, healthcare dropping, finance dropping, energy dropping, staples dropping, discretionary might try to turn around, and services pretty flat. So it's actually looking like tech's going to try to pull things up here. So we will see how that looks momentarily. Like I said, for a little 15-minute market preamble before the open, it's looking like we're more than likely going to kind of sit in this range today. I wouldn't expect anything too fantastical. I think you're going to see a lot of IV get burnt in the first 30 minutes here. Let's see what our IV's looking like. Yeah, you got 32% at the money IV right now. So as we alluded to, or as I alluded to in the past, and I've said in the past, that's typically pretty high IV for at the money contracts on SPY, but recently we've seen as high as 50, 60, 70, even 100 at some point. So being at 32 is not the highest, but we've seen that IV start to condense a little bit more. And now with the VIX sitting at 24, seeing a 32 IV at the money is not shocking. Okay, here's what I was talking about in pre-market, literally right now. The VIX is at 24.05, and I said 24.15-ish, right? That's what we're going to keep an eye on. Let's see if we hit that. We opened above it. And your VVIX is over 100. So there's a strong possibility that we're going to see volatility pull down here and consequently at least some level of a pop on the market. But I wouldn't feel too confident in it until we break over that pre-market high. But if VVIX is over 100 here, we're still up on the day on the VVIX. There's a good chance that volatility is going to pull down here, at least near term, which is interesting to see considering how all the sectors are looking. Again, if you are going to be a bull in this environment, or at least at this open, you're going to want to use that 563.11 as your trigger, which we're getting pretty close to. I personally would not put any of my money on the line here on the open. It's too... There's a stronger probability of not much happening on the day. So if there's not going to be an opportunity for more follow through, unless I'm getting like really scalpy, I don't want to take the stab. So I personally would not touch anything at this point in time. I would more than likely just wait and watch, see what happens kind of thing. And kind of go from there. Let's see what happens the next minute or two. Guys, if there's any charts you guys want to drop in the chat, feel free to drop them in the chat, whether you're on X or YouTube or Instagram. I'll pull them up and we can take a quick peek together, see if there may be some opportunity, or at least I can give you an outlook for the week if that's something that's more your speed. So if there's anything out there that you guys want a second opinion on, that you could do whatever you want with that information, feel free to drop them in the chat. Considering the market's just kind of choppy here, more than happy to fire through some names for you guys. I'm trying to break that pre-market high here. It's just, I don't know. We did break it. If it does break with volume, which volume's okay, there's a good chance you could get a short-term push here, probably to like mid 464. It's just not enough. There's not enough meat on the bone for me to take the risk, in my opinion. Notice how, like, when I try to say things, and I would love if more people thought this way, and especially I see it on social media all the time, people say, it is bullish, it is bearish. I'm not saying if things are bullish or bearish. I'm saying if things are a risk on or a risk off kind of environment. If the trade is, I should be more risky, I should be less risky. Because that is and I've personally learned this, that's the better way to look at the market. Instead of looking at things that are like, this is mostly bullish, this is mostly bearish, looking at things from, should I even take a trade? Should I even take the risk? And coming from that kind of viewpoint offers you a lot of advantages that I don't think a lot of people talk about in general on social media. And I think that's something we should focus more on as a community of people who want to trade and be good traders long term. Toby says, okay, TA volume last few days is sus. Let's take a peek, man. Now, I believe these guys are a energy, right? Are they nuke energy? Or am I completely off base here? I'm completely off base. Cloud-based identity solutions allow customers to integrate with nearly any application, service, or cloud they choose through its platforms. Blah, blah, blah. All right, so cloud AI services essentially enables customers to automate secure access throughout their ecosystem employees. Cool. Toby, if there's anything else you want to drop in there just so I have a better idea on this company, I appreciate it, because that was a little vague on the description of the company that Weeble provided me. Let's see. Yeah, big volume pop, you're right. On the 30th, wow. That is 25 million, wick down, came right back up, closed decently. You're above your POC here at 11/12/54 if we're looking at the last 2 months exactly. Let's look at the monthly real quick. Okay. Interesting. So right around where on the monthly candle, the March high monthly is right around where your 50 MA is now sitting on for this current month forming. That's interesting. So you also notice on the monthly, the last 2 months actually had a lot of volume, like Toby's alluding to here about higher volume. You are coming down to the 200, or I should say the 200 MA is coming down on the weekly, which could show a decent reversal sign here, especially with the red SAR as well. And I do really like that volume there on this last weekly candle. It's a decent weekly candle as well. I don't hate it at all. That volume, did they have news perhaps? Because that would obviously be very helpful. How many days ago was that? That was the 30th, so was that 5 days ago? Let's see if they had news. Buzz. Announcing it will replace Berry Global Group in the S&P Midcap. There you go, Toby. OKTA set to join the S&P Midcap 400. So you're going to see some funds start to get in early on that. So that makes a lot of sense if that's the reason. There could be other information out there, but that's looking like the logical reason on why you're getting some level of a big volume bump here. I don't know when they're going to join, but that would be your catalyst. Let's see if I can get some information on this a little bit more specifically. Cloud software company AI integration. Okay, cool. Yeah, so it looks like joining, and as you guys know, or maybe you don't know, so let me educate you. When some of these companies move from indexes, there's obviously going to be a lot of flow as people who have, as hedge fund managers have certain funds that they will buy and sell certain names to have exposure in all these companies that they say they're supposed to have exposure. For example, let's say you buy a mutual fund for a S&P 100, right? The top 100 names in the S&P. Or in this case, the top 400 names in the S&P. Mutual fund managers are forced to buy this company, and they're forced to dump the other company. So whichever company is going out and going in, you're going to see volume come into the company that's going in, and volume come out of the company that's going out. Or I should say, volume is going to increase, but the price will drop because there'd be more selling and there'd be more buying when people are buying this company on at least the approval or the speculation here that they're going to be moving into the S&P 400 in this scenario. So consequently, that's where you're probably seeing a lot of this volume come in. And then you have people like yourself, myself, anyone else out there who sees this news, who sees this volume, and with a decent technical setup, where your weekly here could actually get a pretty solid move here on the monthly as well. If we're breaking over this high here at 118.07, that recent monthly high, this has legs. You're in kind of like no man's land up here, 118.07, and then getting, I'd watch this monthly high, the 430 2020 monthly high, 158.94, and again, talking from an equity standpoint. The one thing you got to keep in mind here, I'd feel a hell of a lot better about this taking a stab here, maybe putting a stop at like 111. You could put a pretty tight stop on this, honestly. 110 even, 111, 110. You're only risking like $3 downside here for at least like $40 upside. Pretty good risk to reward. Earnings on 527. And with what I've been supplied with, the information of this company, it seems like they're more of a SaaS company, which isn't really going to be impacted, or at least in my opinion, it wouldn't really be impacted by the effects of tariffs and the more bearish things that are going on in the market right now, simply due to the fact that their service is a service, right? They sell something that is a service to other people where they're not necessarily selling a physical, tangible product. Consequently, they more than likely aren't going to be affected by that. This is one you should probably keep on watch. I don't hate it. With that inclusion to the S&P 400, if we break over this 118, it more than likely is going to get some legs on it. I think the market's going to pin it probably around this 110-ish area and sub 118 prior to earnings. Your earnings are going to be your catalyst one way or the other here. On the bear side of things, obviously that you have this gap here. I wouldn't say it would come lower than 100 with that news, with that knowledge. So you could, even if you wanted to extend a $100 stop and ride it through earnings, you'd risking 13% downside for, here, let's do some quick math and I'll cheat. Let's assume that you got in at today's price at 113.48. Let's just say you take profit at that 158 area. Let's say you stop at 100. You got a 3.3 to 1 risk to reward ratio. So for every $100, you could stand to make 330 in this case. So you're risking about a 12% drawdown for about a 40% upside. Not bad. If you want to hold through earnings, depending on your risk appetite, I should say, not bad to take a stab here. You might want to wait a day or two just because of where the market's sitting. You could see a little bit of a pullback, especially in tech. And also companies like this before. So when other companies report, they get kind of like a preemptive move. So if other companies that are on the same level of this, which Toby, I'm not sure if you know of other companies that are doing this specific kind of service or offering a similar service, if they're reporting earnings earlier, this will have a sympathy play. So you could get, if the other company's earnings are bad, this company could fall and you might have a better opportunity to get a lower entry, for example. Maybe you get that entry around this like 105 area, and now you flip your risk to reward to almost 10 to 1. Really solid. So if this gap does fill, then you've got a nice 10 to 1 risk to reward. So that's how crazy this can move, just so you guys can understand. The difference here, buying today, for example, at 113, or letting it retrace if you're patient, if it does retrace, right, it may not, and getting a fill lower at this 105 area allows you to keep the same level of stop with a 5% drawdown here, but you're getting a 50% upside because your reward is higher because you bought in at a lower price and your risk stays the exact same. So now your risk to reward goes from 3 to 1 to 9 to 1 or almost 10 to 1, depending on when you fill. So a few different ways you could slice it. Like I said, I feel like it more than likely won't break this 118 area until after earnings. So if you wanted to be patient and keep an eye on this one, you may have that opportunity. Those earnings are on the 27th of May. So more than likely it's going to bounce around in here. You may get that opportunity to get a fill around this 105 area. Unless we get some sort of news or something that helps it pop up here before earnings and you might get a run. So this is a name I'd keep on watch because it could get that move prior to earnings. I just find it very unlikely, but like Toby alluded to with this volume increase here, with it being added to the S&P 400, there is a possibility that you could get that break there and have a pretty decent technical break to the upside. So something to keep in mind. Toby says, I like the 110-ish stop idea for an equity swing. Hell yeah, man. Yeah, a lot of people, too many people that are newer traders think they can only make money or they want to make money as quickly as they can through options, which is true. You will make, it's leverage, right? But trading equity, especially in like this kind of environment, you might find yourself feeling a little less stressed. You could even do something where I talked about this in the other stream. You could maybe deploy 50% of the allocated funds you have for this trade right here at the 113 level. And then maybe you deploy another 50% at the 105. That would give you roughly an average of like 108. Now your risk to reward is 6 to 1 instead of the 3 to 1 if you went 100% at the current price. So tons of ways you could play it. But I like the name. I think you could have a nice move here. I just think it's more about being patient and looking at other adjacent companies that could offer, I guess I want to say, insight into potential performance in this sector in general. Let's pop back to the market again real quick, and then we will roll into our first segment here because I have a feeling not much has happened. I'm right. Not much has happened. I'm glad I'm glad Toby you dropped a name in the chat for me to discuss because Snoresville on the SPY right now, we've gone nowhere. Like I said, that recent pre-market high before the market opens, is going to be a decent resistance level. We popped a few cents above it and then immediately tumbled back down. But we're not even coming back down at a fast rate. It's just such a high probability, even from a logical standpoint, that we'd get some level of chop today. But that thesis is supported from a technical standpoint just by looking at the daily chart. So I said chasing either which way today, you're probably going to have a bad time. If you're a day trader, I should say. And it's probably going to be like that tomorrow too. So it's probably going to be uneventful until Wednesday, because everyone and their dog who trades is looking at Wednesday to get some semblance of where the market could be heading. And that is a perfect segue to roll into our next segment, the week ahead. So since this will be the only stream this week, I wanted to give you guys a little bit of analysis for the rest of the week, and also give you guys a few things to look out for from a risk perspective as well. That way you can make smart decisions and you don't feel like you're left in the dark, which sometimes can happen. So let's take a look. First, I want to take a peek at our news coming up for the week. So I already said today's news. I'll say it again just so you guys are aware, because obviously I know some of you are day trading, so you might be listening to this in the background. So it's going to be fine. You might find this helpful. That PMI data, so you have 9:45, which already dropped, and then you have 10 o'clock as well. So be mindful of that. Trump delivers a sports announcement. I'm sorry, I skipped over the Treasury Secretary speaking at 11 today. That could impact the market. Be very mindful of that. You can watch that live on YouTube, so keep an eye on that. Trump delivers a sports announcement at 1 o'clock. I have no idea what that is. More than likely won't impact the market, but someone could ask him a question about how he plans on being the next pope, or how he was mistakenly a Sith Lord in the most recent post by the White House. If you don't know what I'm talking about, go to Twitter right now and look up the White House, and he's holding a red lightsaber. It's got to be done on purpose, in my opinion, but someone's probably going to ask a question about that. And then you have 3 o'clock and 3:30 when he's going to sign executive orders, and which could impact the market. And then welcoming home a returned citizen at 3:30, probably just going to be rhetoric. I wouldn't be too worried about that. The 3 o'clock signing of executive orders, depending on what he says there, obviously can impact the market. Looking forward to tomorrow. So tomorrow, you have the U.S. trade balance and the Canadian trade balance pre-market at 8:30. That more than likely will affect the market, especially in pre-market. And then tomorrow, throughout the day, at some point, Trump is set to meet with Canadian Prime Minister. So keep an eye on that. You also have your 10-year note at 1 o'clock tomorrow, and AMD reporting after hours. For those of you that like AMD stock, be conscientious of that. That could give you an insight into the semiconductor industry and their performance. AMD has been beaten down a lot recently. In fact, if we take a quick peek. I'm like, that's not AMD. AMD. There we go. Looks like poop. But if it was to reverse, it would be around here. With a little bit of an up thrust, you could get up to this 115-ish area, and if that breaks, you could get all the way up to tap the 200 MA. A lot of people have caught this falling knife and been burnt. Do I think it's time to catch this falling knife? No, I don't. That being said, 100 is obviously a very strong psychological level, just in general. And some people find that silly, but psych levels are pretty valid in the market. You'll come to see that. Whole number levels like 100 tend to be an area where people who don't really trade, who just look at numbers on a chart, will go like, oh, I want to buy, it's at 100. Like that. Which is actually a lot more people than you think. So keep an eye on this level. I mean, I've got a ton of, as you can see, a lot of lines down here under 100. So I'm looking at basically between 60 to 100 if there was a buying opportunity. More than likely it's going to be in this like mid 80 range, but we'll keep an eye on that. Obviously with the tariffs and everything, it did sink lower than that. Came down to 76.48. This is not a name I'd rush into at all whatsoever. Anyway, back to the news. Keep it rolling with looking ahead on the week. We are on now Wednesday, so that's really all to keep an eye out for tomorrow. Nothing major. With that being said, the Trump meeting with the Canadian Prime Minister, Obviously, tariffs are a big thing, right? Something could be said there, something could come out of that meeting, something could happen after the meeting where you could get a little bit of a move prior to Powell speaking on Wednesday, or I should say, which rolls us into Wednesday. You do have Disney and Uber earnings reporting pre-market on Wednesday. You have the Treasury Secretary testifying at 10 o'clock. And then most importantly, the Super Bowl of finance every month almost. The FOMC rate decision at 2 p.m. Now, in my opinion, I believe that the Fed, I believe they already said they're going to cut twice. I don't think we start to see the cut yet. I think if anything next month, maybe when we see the first cut. But I don't think we start to see them cut in this month just yet. With that being said, what you want to be very mindful of, especially with the rate announcement, go back in history and look at every time we've had a rising rate environment and when rates are actually decided to be cut. And that moment in time, after rates are cut, is typically when we see some level of bearish move on the market. Not right away, but 1, 2, 3 months later, you get a deep bear pull on the market. So something to be mindful of if and when that rate cut decision is made, that you want to be very conscientious of that, especially for your long-term trading, or if you're long equity, maybe put stops on your positions, maybe cut back a little bit. But you typically, when the first rate cut comes out, see a good push. The market tends to get very bullish. It's optimistic for your IWM, so your small cap companies tend to see it as optimistic because the cost to borrow money now becomes cheaper. But as time goes on, that tends to sour very quickly. So just be mindful of that. I wouldn't get too swept up into the hype if that does happen. It will happen. You could even see the SPY go back to all-time highs off the back of a rate cut. And then it could sour very quickly. So just be conscientious of that. On top of that, you have 3 o'clock that day, so more than likely while Powell's speaking, consumer credit, which is going to be very interesting, very important to keep an eye on. That brings us into Thursday. Thursday, not too much. You do have jobless claims at 8:30, which will definitely impact the market. Outside of that, not seeing too much, at least announced for right now. And lastly, Friday. Friday is Fed Friday. 1, 2, 3, 4, 5, 6 Fed speakers on Friday. Yay. I hate that, and I hate that it's also on a Friday. So be mindful of that if you do decide to trade. Now, in all fairness, only 2 of those Fed speakers are actually during market hours. That's Goolsbee. I hate that guy's name. Goolsbee. And Williams at 10 and 11:30 respectively. So put those on your radar for this week, and you guys are all set in terms of your news catalyst heading into this week. Now, looking at the SPY as a whole, S&P 500, whatever you want to look at, we can look at SPX, but I like to look at SPY. As I mentioned in the pre-market here, we're more than likely going to stay pretty range bound, but in basically this GP here, between this 561.89 and my top line LOI here at 567. So about a $4 range, at least in my opinion, for the next 2 days. Now, things that can change that would be the Trump meeting with the Canadian Prime Minister, or if Trump says something today with the executive order thing. And then obviously leading into FOMC, which I think you'll actually break out of this range one way or the other. Now, if you're a bear, what you're going to want to watch for is breaking beneath basically that 561.89. You could get caught in one of these 2 levels here, so 560.84 or 559.39. But getting this gap fill here would make the most logical sense. That's also an area of decent support down here, right on this 556.32. So you do have about $5, $6, $7 downside here, at least from today's price. If we see a downside push on the market post FOMC, that would also fill the gap to the downside, which would be good as well if you're a bull. So not the worst case scenario. I wouldn't be too bearish past that. That would also roughly give you a back test of the 50 MA as well on the daily and your 8 EMA. So actually, that might be a sign to go long. If you see Wednesday roll around and we're in this 556-ish area, low 556s, on the daily, that could be a sign to go long with a decent stop, like a tight stop on that. Even at like 554.50, you could rock maybe even a $1 stop. Pretty tight stop on that for a bounce to the upside. It's not a cup and handle by any means, but you could have a really dirty looking cup and a tiny little handle here. But getting, like I said, that kind of a bounce in here, and then if we do see a bear move to the downside, that would be the target I'd be looking for, that 556 area. Now, if we see Powell is dovish and the market sees some upside relief, you're going to want to watch 557 to break, and obviously Friday's high. Past that, this 570.19 area is going to be a hard one to crack. That's your 200 MA. And logically, it's about the same kind of risk here. It's about $7 to the upside. So both ways, you're looking at about a 50-50 split here, where the downside risk or the downside gain, obviously depending on what the current price is, roughly about $5-6. The upside gain, roughly about $6-7. So pretty even. Now, if we see bulls power through the 200 MA with volume, you're more than likely going to tap this 576.70. Big bull push on the market. If that does happen, expect a pullback and a back test of the 200 before any continuation higher. Do not get sucked into a bull trap short term by breaking that 200 MA, seeing a bunch of volume flood in. You will run to this 576.70. I'm very confident of that. However, past that point is very treacherous to be a bull short term, in which case a pullback to the 200, and you're going to want to see that back test and hold before going higher. So those are my two outlooks on the week for the market as a whole. So there's both a bull and a bear case this week with how the market's sitting. Honestly, I could see both scenarios coming to light, and like I said to you guys earlier in the show, it's more about understanding the risk and understanding where to take risk, if taking risk is even the right thing for you to do. And where we're sitting today, especially as a day trader, unless I'm scalping the lows and scalping the highs, not something I necessarily want to touch. Looking at the VIX, I talked about this pre-market, but we'll talk about it again. If we do see, so going back to the SPY daily chart, if we do see SPY break that 200, you're going to want to see the VIX sink that 2309 pretty comfortably and get under like 20, I'll say 2150 for simplicity. If you're under 2150 on the VIX, that could be a very good sign. And here's what you want to look for next week. If we do get a bull push to the upside, if we do tap this level, and if we do come back down and back test the 570, whatever this is, 570.19, the 200 MA, you're going to want to see the VIX sub 20. And if the VIX holds sub 20, there's going to be a very, very, very strong possibility that we get into the 580s pretty comfortably. I'm very confident of that. If we see a VIX sub 20 and the market is north 570, we'll say 570.50 for simplicity. There will be a good, strong probability that we'll see the market uptick another 10 points with ease, and then from there reassess. Volatility still, in my opinion, too hot, and it is staying too hot. With that being said, there is a possibility here. I mean, look at this range. I should probably do a few more lines in here, but this is the big line that matters, this 35.17 on the VIX. There's a little bit more importance here, like I said, in the 25.15-ish area on the day. But there is a possibility that if the bears do get the ball here and start to run with it, that you could see volatility curl up to the upside. So that's why I'm saying there is a case both ways. We're actually seeing SPY break that pre-market high right now as my chart updates. There it is. And we'll see if there's a continuation here. It would be nice for the bulls. I would actually honestly prefer we stay down in this range and close the day down in this range today, because I would want that consolidation heading into the rest of the week, basically tomorrow and Wednesday. We are coming back off the back of that data that just rolled out. Forecasted was 50.2. Actual came in at 51.6. So clearly the market liked that to some degree. And we will see where we go here. I would not push further than this, but hey, if it happens, it happens. Good volume on that last candle, though. So you're seeing that pre-market high break with decent volume. It's a good sign. Qs are up. IWM is at the highs as well. We did notice that VVIX held over the 100 area, and as a result, VIX is starting to come down. So volatility is still whippy, though. If we want to see bulls have a sustained move, you're going to want to see the VIX drop a little bit more. I'm sorry, the VVIX drop a little bit more aggressively, which it is dropping a little bit as the VIX is coming down at a sharper decline than the VVIX, which is actually a good sign on the day if you're a bull. So we could see a continuation here. It's just that's something I would personally put my money on, and I'm not going to lie about that either. Guys, we have 129 concurrent viewers at the moment. If you could do me a quick favor and drop a like on the stream, share it out to your friends, drop a comment, say hi. I read everything, whether you're on X or on YouTube. I will see it in my chat here. So let me know that you're here, that you're enjoying the content, and you want to see more of it, and I will be more than happy to continue to bring it to all of your ear holes as frequently as I can. Let me see here. Now we're going to roll into the heat check. So again, this is a new segment. Basically, the idea of the heat check is to look at 3 to 5 names that are hot right now on social media and generating some buzz. If you don't know who they are, or if they're a smaller company, I'll explain to you who they are, what they do, why they're generating interest. And then lastly, we'll look at their charts and what they look like. So the first 2 names I'm going to bring up to you guys are not that fun. They're not that interesting. It's nothing that you would be very hyped about. And that's Apple and Microsoft. Those are your first 2 names on the heat check for today. Now, Apple is on the heat check mainly due to the news swirling around their earnings. I thought earnings weren't too terrible, but you are seeing some bearishness come through on the last 2 days. That being said, they announced a $100 billion buyback, which is absolutely ridiculous for this company. They're looking to buy back, what's that, they're a $3 trillion company. That's nothing. That's like 0.3% of their market cap, which is insane to think about. No, I did that wrong. Is it 3%? Anyway, a very small part of the market cap, which is $100 billion, which is crazy, right? But I think why the market is scared is because of this little tiny detail, and that was the $900 million in tariff costs this quarter. Let's just put this into perspective, right? And I'm going to tell you why I'd be bullish on Apple here. Maybe not directly here at this price. Today's not bad, actually. Maybe here. But in general, we'll look at the chart in a minute. In general, think of it this way. If I'm Apple and I have $1 billion that I can just buy back my own stock, and I have a fear of a $900 million, we'll just say $1 billion, tariff increase to my cost of doing business for this next month, or I'm sorry, for the next quarter, how is that really impacting my bottom line when I have a war chest of $100 billion that I'm buying back stock with? Not very much, at least in my opinion. I think the market's scared because they see this as an impact, obviously, on their supply chain, which is going to affect how they make money. But does anyone really think this will be a long-term effect? And even if so, do we think that the management at Apple would just allow there to be higher costs? Would they eat the costs? Even if it was an additional $1 billion a quarter, $4 billion a year, is that really going to hurt their bottom line that much long-term? That's up for speculation. I would say no. I would say that outside of the supply chain woes, it wouldn't shock me to see Apple move a lot of their infrastructure to India if we continue this China trade war thing. And we're actually seeing a lot of people, or I shouldn't say a lot of people, but a lot of companies are looking to India as the new China, potentially. And India would love that. They would love to say, hey, come to us. We'll charge you half as much and do the same job. That's going to be booming for their economy, and they'd love that. So I think Apple right now, if we're scared, if you're someone who was a bull at 212 and you're seeing the price at 200, I think I would stay a bull. I would not cut this at a loss by any means, because I think the biggest fear that you're seeing specifically with Apple is just this. It's just supply chain woes. We're worried about tariffs, and I think a lot of it is overhype. I also think that the market was somewhat prepared for them to say something about tariffs, and it wasn't necessarily shocking, nor should it have been, right? It's no mystery to anyone that all their iPhones are produced in China, right? So that kind of goes without needing to be said, at least in my opinion. And I think if we see a deeper retracement here on Apple, I'm a buyer definitely at 195.83 or this 187.52. Now, you're right on this green chart, and looking at things from a technical standpoint, right? You could see a a bear move here pretty soon, where you break the green SAR here on higher volume, it looks like, with your MACD curling down, does hint to some level of weakness here. Now, what I'd be looking for, again, as the long point, potentially finding some support at this 195.83. I wouldn't get in on the first tap. I'd wait to see if we consolidate there. I think what is more than likely to happen is getting back in this mid to high 180. So 185 to this 187.52 area would make a lot of sense before considering a long. Looking at the weekly, your weekly MACD starting to curl up here. Definitely like bearish, right? Near short-term bearish. But if we get back again to this range and we build out basically a higher low, you also have the 200 MA coming up on the weekly here. It's showing that trend could be reversing here, at least near term in terms of the week. Monthly as well, getting to that range that I was just alluding to on the monthly. I say that word a lot, alluding. I gotta stop. Find a new word. It's an important price range, that mid 185 to 187-ish area. That's where I like Apple. I think you're going to get back there. I think what you need to see is a higher low develop, getting some level of back test there. I think this is a no-brainer, at least in my opinion. But that's why a lot of the hype is going around on Apple right now throughout social media. Is a lot of fear that I'm seeing. A lot of people who are traders seeing like, oh, Apple's going to go to $100, blah, blah, blah. I will agree they don't innovate at all anymore, which is detrimental to their stock. I don't think they innovate as much as they should or as much as they claim to, which longer term could damage their company, especially if iPhones just aren't popular anymore for whatever reason. So they do need to bring some innovation back, but outside of that, I think it's a pretty safe name to own. And I think you should actually embrace the freaking out of people and the bearish nature of people coming off this ER, because the ER, in my opinion, was not that bad. And I think a lot of this fear is already baked in, and you're seeing a lot of people sell when it's unwarranted, at least in my opinion. So that's Apple for you. That is the first name on the heat check. The second name on the heat check, another name you know, is Microsoft. Had a really good earnings, as you can see on the chart here. And they posted better than expected results, which it's extremely important in this environment, because with the uncertainty going around with tariffs and everything, that helps boost investor confidence, right? So now you're seeing a lot of people rush into Microsoft, which is why it's on the heat check. You're seeing a lot of popularity, a lot of hype around Microsoft, especially on social media. I would watch around this 440-ish area before getting too confident. I think it's more than likely we come down and backtest at least the 200 MA. I don't believe we fill this gap here. Unless some sort of trade war thing happens and things become worse. I don't believe we fill this gap all the way down here. I do think we get a back test to like low 410s, 410, 413-ish area. You're starting to see already topping tails. So these wicks here, 1 wick, 2 wick, 3 wicks on the day. You see another wick tomorrow, you're more than likely going to retrace back down. So I would be careful on the hype on this one. Not that it's bad, but the most important thing that Microsoft said during their own earnings, at least again in my opinion, is that the company indicated that big corporate clients aren't necessarily slashing their technology budgets yet. Obviously very bullish for Microsoft, but that's something you should keep in the back of your head if you're a tech investor and looking at these other companies into earnings. Microsoft obviously at the forefront of, I guess, multiple businesses within the tech realm. But them being the leader, essentially saying that corporate clients aren't slashing their budgets for tech yet, is a good sign if you're in some large cap, mid cap names that are in a similar sector, where you could see some potential decent earnings come out, knowing at least that was said. This is why I mentioned last week that you want to pay attention to these earnings calls, so they're going to give you an idea of how it could affect other businesses that you may like. If they said, and the reaction would probably be the inverse of what you saw, but if they said that corporate clients are slashing their budgets, we're going to lower guidance, it's looking iffy, whatever, obviously the reaction would literally be the opposite, but also you would see a lot of these other companies that are tech companies, SaaS companies especially, get a violent reaction to the downside, because if Microsoft had clients cutting budgets, then you're going to see budgets get cut for the smaller guys too. So you got to remember, if the big fish got to eat, the small fish will eat. If the big fish doesn't eat, small fish definitely aren't eating. So keep that in mind when you're listening to these ERs, especially how it could affect your portfolio if you have other companies that are adjacent or in a similar industry to Microsoft. So I'm very happy that they had a decent earnings. I like their report, but I would not hype on the hype. I wouldn't hop on the hype train just yet. I'd let this come back down to this 410-ish area before taking a stab. Even then, you could put a stop at this 406.51 in case the gap may fill. Then you're only risking $6 of downside there, and roughly, quick math, even a 5-to-1 risk to reward, just getting back to this 447 localized high up here. So decent risk to reward if you get that back test. Otherwise, I would stay away from the hype train. If it goes, it goes. But I think if you want to be smart in this environment, you let this play out. You let people get hyped, and then you let them get burnt, and then you buy their shares when they get burnt, when they're chasing up here. Alrighty. Next, we have two names that I wanted to bring you guys that you may or may not have heard of. And these both report earnings I believe this week. So please take everything I'm about to say with a grain of salt, just because of the fact that they could be more volatile because of that. So the first name on the heat check here is SYM, Symbotic Inc. This company, if you don't know about it, specializes in AI-powered robotics and automation systems that are tailored for supply chain and warehouse operations. Their solutions aim to enhance efficiency and accuracy in inventory management. One thing you want to be careful about this company in particular is they're currently operating at a net loss. So you want to be kind of careful. But with that being said, they do have $903 million in cash, at least as of the last reporting. And revenue guidance is still pretty decent. So this is a name where you could get a turnaround play here. Now, again, you have earnings coming up on the 7th, so 2 days from now. That is obviously going to impact this, especially because they are operating at a loss. And remember, these companies that are growth companies in this environment tend to be criticized a lot harsher when they miss or when something happens, because they're not generating a profit, right? They're not making money yet. They're making money, but they're not turning a profit. So if they're not turning a profit yet, when they have a loss or they don't make as much money, it could be seen as a huge detriment. Now, what I like about this company, and this is part of the hype that we're seeing on social media, they have a Walmart partnership. So they actually acquired Walmart's advanced systems and robotics business, which is pretty cool. And they entered into a commercial agreement to deploy automation systems all across Walmart's accelerated pickup and delivery centers. So that gives them obviously a huge in with Walmart, one of the biggest retailers in the country. Obviously something to be very knowledgeable of if you like this kind of play, if you want that kind of retail exposure. Flip side of that, depending on their agreement, which I didn't dive too deep into, we don't know how, for example, if there are fewer, we don't know if they're paid per pickup or whatever, per delivery. So I'm assuming that's not the deal. That would be your one concern because of tariffs. I'm assuming that's not the deal, but if that was the deal, that's something you want to take a look into. Another reason why this company is getting a lot of hype online right now, they posted impressive Q2 results. Earnings per share came in at 32 cents, which was okay, pretty good. And revenue surged about 59% year over year, which is great. And again, with companies like this, you need to see growth. Year over year right now at 424 million. Pretty solid from the fundamental standpoint. This is one of those growth names where I don't hate taking a stab at it, which is why I wanted to bring it up. Now, again, it is getting some hype on social media. The volume is not really even reflecting that. Obviously, you have the tariff low volume here, but outside of that, volume is actually pretty standard. But people have been talking about this name, which is why I wanted to bring it up. Market cap on this one, 13 billion, almost 14 billion, so pretty decently sized company. The other thing you want to be knowledgeable of with Symbiotic is that Vanguard actually increased their holdings by 41% on this company. They own 5 million shares of Symbiotic, which can be a good and a bad thing. Obviously, if Vanguard is buying shares, they think it can make money, right? Vanguard does not buy shares in companies to lose money. With that being said, Vanguard can also dump shares, right? So there is a risk factor to that. If we zoom out on the monthly chart here, I'm going to talk about some levels here momentarily, but we're in an interesting spot where depending on obviously where Vanguard added yours, I think you're at a pretty fair evaluation, all things considered, from a technical standpoint. And I think the upside is actually more favorable than the downside on this name, which I will talk about momentarily. I guess I have two more notes here. They've recently expanded their reach with new installations and signing their first ever logistics as a service customer. So now, since they're doing, so if you're interested in AI, this is a company for you with robotics and automation, but they are also working as logistics as a service. So instead of just software as a service, they have logistics as a service. So imagine you run a warehouse and you don't know how to get goods from point A to point B. This company is looking to get into that field of doing all the logistic work for you. So that's something that's very interesting to me, especially with the AI side of things, obviously growing industry. Could be a very interesting name depending on how that platform plays out. Even if you don't necessarily want to invest in this name, I think listening to this earnings call in particular could be very interesting, as I'm very peculiar on this company. And obviously because of this, they're positioned to benefit from the increasing demand from automation in general, in logistics specifically, and in supply chain. So obviously we're still seeing, I shouldn't say obviously, we're still seeing issues with supply chain from COVID. We have not recovered from it. And companies are always wanting to improve their supply chain in general. And this is a company that could actually help them improve their supply chain and lower costs at the same time, which is a win-win. If I'm a business owner and I have a warehouse and I want to make more money by lowering my costs and make things more efficient, why would I not be a customer? Why would I not be interested, at least in what this company is offering? So with that being said, let's look into the technical side of things. And again, remember that we have earnings on the 7th. So earnings are 2 days from now, so be mindful of that. Currently trading $23.44. You have your POC down here at around 21.83, and I have my lower LOI here at 21.38. Now, that being said, like I said earlier, the upside on this chart is more interesting to me than the downside. We actually have two gaps open to the upside here between 27.58 and 30.12, and this last gap that wasn't filled yet at 36.63. So there is a decent upside gap here to fill. My last LOI, at least near term on this chart, and when I say near term, I'm saying like the next 6 months or so, would be 40.83. That's what I'd be looking at. To the downside of things, like I said, you do have that support here at that 21.38. Then you have this 19.25, and finally, I wouldn't risk lower than 17.11 on this name in particular. So a little bit wider risk than I typically take, but that's because the reward is wider. So let's take a quick look at the risk to reward and calculate it here and kind of get an idea of what that could look like. So let's pretend I bought shares today at 23.51. Whoops. 23.51. Let's say my stop is at 17.11, so worst case scenario. And profit best case scenario, I can't see because the thing's in the way. It's 48. It's like 40.80, something like that. 40.83, close enough. So your risk to reward's almost a 3-to-1 risk to reward, mainly due to the fact that you're risking a 27% downside here, but you got to keep in mind that earnings are in 2 days. So if you're risking it, you're risking it for the biscuit here. You're getting a wider range on risk, but at the same time, the reward is a little bit wider. So you do have a 27% drawdown if earnings are poor, but if earnings are good, and again, this is more longer term, I'm thinking like 6 months out, you do have the opportunity to go all the way to that 73% gain there. Now, if we pull this down to about that, if we wanted to be more conservative and just look for the second gap to fill, you still have a 2-to-1 risk to reward, which is still pretty great. And this is assuming a hard stop at the 17.11 area. If you want to be a little bit more conservative, you put a stop at that 19.25, which is right around there. Your risk to reward's almost 3-to-1, only assuming that first gap fill. And if we push up to that second gap fill, 4-to-1. Pretty good risk to reward, all things considered, on a name that I think is at least interesting. So if you have an interest in logistics, in AI-powered robotics and logistics, this is a company that's on the heat check because of their positioning right now, because they have earnings coming up, and because of how they're sitting in the market. This is a name where I would highly suggest you look into and see if it's the right exposure for you, if that's something you want to consider. Regardless of how the earnings go, if it does see some bearishness in general, depending on your risk exposure, maybe something you'd like to consider. $14 billion almost market cap company, so it's fairly big, so I wouldn't expect a move all the way down to the 1711 unless they had some sort of catastrophic news. Realistically, the 1621 would get tapped if it was something pretty bad. And realistically, off the back of earnings, if there was a really good report, this 2615 would get hit and then would kind of fart around a bit. So if you want to make it super realistic, and again, if you're a near-term trader, this is what it would look like. Your risk to reward is actually bad. It's under. You're risking more downside than upside if you got in today, right now, with that minimum price target there, that first price target at 11%, risking an 18% downside. So that would not be good. So depends on your risk. This is a name I'd definitely keep on watch, and you can see why people are very hyped about it on social media. And yeah, that is Symbiotic for you. Now, the next name I have for you guys is another name, again, that is very, very hyped on social media right now. You may or may not have heard of it, and that's GigaCloud. Hold on, let me switch the screen here right now. By the way, one's in the chat if you've heard of either GigaCloud or Symbiotic. Two if you haven't. I'm just curious. Have you guys heard of these names? Because these are the names I pulled up. I went through Reddit, I went through StockTwits, I went on X, and I was trying to find these names that were not super big, so you may not have heard of them, but try to find I want to say the cult communities, but not too culty. So not like a GameStop AMC kind of thing, but something where there's a lot of hype around and interest around the name and see if there's any truth to it. So yeah, let me know in the chat. One's if you've heard of Symbiotic, and two's if you haven't, or Symbiotic and GCT. Just want to get a feel on if you guys have heard of these names before. Very curious to see. All right, the second name on the heat check is GigaCloud. So GigaCloud operates a B2B e-commerce platform that facilitates cross-border transactions for large parcel merchandise. So think your furniture, fitness equipment, desks, that's furniture. Anything that's large, right? GigaCloud is in that kind of logistical framework. They have end-to-end solutions that integrate product discovery, payments, and logistics. So they're kind of like they're trying to be a one-stop shop for this kind of industry. Some key drivers on why we're seeing a lot of people get very hyped about this name on social media is that they're buying back $62 million in shares of their stock. Now, they recently announced a buyback, and they announced another $10 million, I believe, in shares that they're willing to buy back, which is always a bullish sentiment if you're an investor in general. Anytime a company wants to buy back more of their stock, dilution works the other way, right? There's fewer shares. That means my shares are worth more. Even better. So that's the first reason on why people are pretty excited about this. Just so you understand, this company is a much smaller company. So it's a $500 million company at market cap. So buying back $62 million in share, I know it's not one-to-one, but you're talking about them buying back basically 10% of the company. Pretty cool. Other things to be mindful of, they've reported year-over-year revenue increases, which were pretty significant, and profitability has been improving as of the third quarter. So looking like financials are pretty okay. Recently, they actually changed their CFO, which some people are seeing as bullish. Depending on your viewpoints, anytime you see a C-suite change, it can be good or bad. If people think, hey, the CEO or the CFO sucks, whatever, and they bring someone new in, that could be bullish. If they like the CEO, or if it's a culty CEO like Elon Musk for Tesla, and they get rid of him, people are going to hate that, right? So that could be a bullish or a bearish sentiment. It really depends on your viewpoint here. As I just learned about this company, I will not say if it's bullish or bearish. It's just something that people are talking about, but it leans more towards the bull side of things. At least from what I'm seeing on social media. They also acquired Noble House, which adds 2.4 million square feet of warehouse space to their network in the U.S., so they're expanding their footprint, which is good to see. They're serious business. And in general, I personally don't like analyst price targets. I think they're obviously going to set their price targets a certain way, so you buy and you sell when they want you to buy and sell. But with that being said, analysts have set a price target on this name in particular at about $47, which implies, and that's on an average return, or an average of what analysts are expecting, implies a 143% upside move from here, which is pretty sizable. Now let's look at things more from a technical standpoint. On the daily here, you're trading 1347. You're about $2 or so off of that tariff-y lows, which actually they went lower after the 4-2 liberation-ish day pricing. So about $2 off the recent lows. If we zoom out on the weekly here, let's zoom out. Oh, here we go. Not a horrible place, to be honest with you. It's in a place where you could see a decent amount of volume. Now there is more volume down here at like 5 and 6, which makes sense because obviously as shares get cheaper, you could buy more shares with more money, volume would increase. But if we zoom into just the recent time here, and we're looking back to 2023-ish, it's in a place where it found some level of bullishness before pushing to the upside here. However, it has been kind of just melting down for quite some time, at least in the year 2024. Will 2025 be a turnaround story? That is to be seen. Now, on the monthly chart, again, it is bearish. It is not too exciting here. What I do like about this name is the risk to reward opportunity here if it can get some bulls on its side. Now, the nearest support here that I'm seeing is 986. So that's assuming this recent low breaks. And if this recent low at 17 breaks, you could see a farther thrust to the downside here. If we're looking at the weekly, your weekly MACD is starting to curl over, but you have pretty poor volume. So for a name that has been hyped on social media, the volume isn't really backing it up. What I like to see, at least when I'm taking an investment in general, depending on my thesis. Not a ton of volume here. In fact, the VMA, so that's the blue line here, that's your volume moving average, you can actually see here has been moving steadily lower and lower and lower, with the exception of this little blurb here where we had tariffs announced. But again, moving more to the downside here. Now, it could be indicative of a few things, but if we're just focusing on the last 3 or 4 weeks here, price moving up, volume moving down is bearish. Not good. Anytime you see the price continue to the upside and volume is not there to support it, that can be indicative of people are selling, getting out of the way, or people aren't even excited about buying, right? People are not buying at this price. It is a price in which if the price is moving up and the volume's coming down, there's lower activity. People do not want this stock, at least at this price. And that's what I would be worried about. And the daily reflects that story as well. As we sit in this little range here that we're farting around in between 1364 and the lows here, there's not a ton of volume, and it's kind of upsetting because I actually think they have a decent, I won't say decent business, decent industry, and decent thing they're targeting. It's something to be mindful of. This is a name that I would personally stay away from at this point in time. I think there is a good setup here for there to be a potential move on good risk to reward to the upside. With that being said, though, I don't think it's yet. Especially with this company being a $500 million company, so being a smaller cap company, the moves are going to be more aggressive. So the fact that volume is this low on this size of a company, there's showing no interest, or at least in my opinion, not a lot of interest in this name, and it's something you want to at least stay away from at this point in time. Now, where I would take a stab would be somewhere down in this 986 to 771 area. Down here, this is where your supports are, and again, if we zoom out on the monthly, this is where a decent amount of volume was before getting a hard break to the upside, and at its highs, excusing the first month it IPO'd, we got all the way to 45.10. So if I can get in somewhere in this range down here, south of 9, north of basically 8, you've got a decent upside potential here, depending on the time that you're willing to wait on this name, at least in equity. But getting long right now could be a risky play here when you do see a potential for a 40% drawdown here. Now, if we play the game here and say, assuming you got in here, you're risking there, and you risk my second level here, second price target here, you're risking a 40% downside for a 49% upside. That is not great. That is awful. And even if we tighten this up a little bit, your risk to reward is almost 2, but it's definitely not that close. And you've got to keep in mind when we're looking at these negative numbers. So here, let me put it back to here. Quick little lesson, if you don't know, which I'm sure most of you do. A 40% loss is not the same as a 40% gain. Let's use even numbers. Let's say 50, right? Let's pretend this was a 50% loss and a 50% gain. Right around there, 50, 50, cool. Your risk to return ratio is going to reflect a 1. It's going to say, hey, 1 for 1, right? I could make 50%, I could lose 50%. But be mindful, if you lose 50% on a trade, you need 100% of a trade to offset that loss. And if you lose 70%, you need 200. If you lose 90%, you need 300. So as that percentage gets deeper into the red, you need a larger gain with the same amount of capital to offset that loss, which is why I would tighten up my risk real good here. Let's pretend I got in on this first level here if I do like the long. Let's tighten that risk down there to that 767. That's still a 22% loss. So this is a name that, unless we see volume come through or unless they blow it out of the water with earnings, which are on the 9th, I would stay away from. I see people specifically hyping this name on Reddit. With the low volume, with how it's positioned technically, I wouldn't short it either. But I think this is a company you might want to be mindful of if you can get in around this $8 to $9 area if you like this kind of industry and if the earnings aren't awful. They are buying back some stock, so obviously there's some faith in the company, right? But right now, I don't believe would be a good time to go long GigaCloud Tech or short. This would be one that I would sit on the sidelines for personally. All right, guys, that was the heat check. So let me know what you think, guys. If you like that segment, I'd like to do that a bit more often. I think it's nice. I think it'd be nice if you guys gave me names, but I want to look at these names that people are like talking about on social media that are really hyped up, because I know some people just get sucked into your AMC, your GameStop, that kind of whole meme trading thing. So sometimes bringing up these names and looking at things from more of a fundamental, speculative, and a technical standpoint, you can kind of get the full game plan instead of just reading some guy on Twitter who says something that's hyping you up, or looking at a chart solely, or not looking at the fundamentals at all. Taking in the full picture and looking at everything, I think, is more conducive of having an accurate trade plan. So in general, to summarize everything that we've talked about on the heat check, bullish Apple north of, I would wait for this like mid 180s area. Short-term bearish Microsoft, not taking a bear stab, but I would wait to, I mean, same thing, I guess, with Apple. Short-term bear, looking at 187.50, Microsoft looking at this 412-ish area. Symbiotic, I'm actually bullish on, but I guess I would need a little bit of a discount, so I guess I'm technically bearish. I like the company, though. This is one you definitely want to keep on your radar, and GigaCloud I would not touch unless you get a 50% haircut, really, like 40-50% haircut. Did like it. Awesome. Happy to hear it. Alrighty. I think that's going to wrap it up for the day. Guys, if you enjoyed the stream, do me a quick favor. Drop a like on the stream. Follow me if you haven't. Subscribe if you're on YouTube. And if you're on X or Instagram, drop me a follow. I am taking off. There will not be an Atomcash angle until 2 weeks from now, the 19th. I'm going to be around until basically the 7th and the 8th. Then I'm going to be taking an internet sabbatical. So for a solid week, I will not be here. I will not be on Twitter. I will not be on YouTube. I will not be posting at all. I'm taking a break. I need to unplug, and I think a lot of you guys should do that as well. Trading can be very stressful. You got to take at least some time to just deplug, de-stress from everything. That way you can come back refreshed. Because it is a stressful thing that we do and we handle every single day. And if you're watching the show, you probably are a day trader. Even if you're a long-term investor, it's important to take that time away and not get too sucked into the weeds. So I will be out until probably around the 19th is when my next show would be. So if you guys like the content and everything, I'm going to be thinking about things as I'm away. So feel free to drop suggestions, comments, whatever. I read everything, and I appreciate you guys taking the time to actually do that, to like the stream, to drop comments and all that. It means a lot to me, and obviously I want to make this program something better for all of you to enjoy, because I take pride in what I do, and I want to make sure that you guys are getting something out of it as well. My goal here is not to tell you what to do. It's not to just make you watch me trade like a lot of other people do. My goal is to actually give you guys actionable insights to help you be the better trader than you currently are, the better investor. Things for you that can help you be better. Actionable things you can actually take away and learn from watching the show, as opposed to just watching me do things and say things. More about giving you perspective and how you can look at things maybe a little bit differently and challenge your perspective on how to look at things. So that's my goal, and I hope to achieve it, and I would love feedback from you guys in regards to that, because that's my goal. And knowing my goal, having your feedback, lets me better steer the show for you. Question for you, Adam. I'm finally green on my Microsoft. I remember this. My average is 420. Would you sell short term? Well, I cannot give you specific buy or sell recommendations, what I can say is two things. One, if you are long Microsoft, depending on the time frame, you want to be aware of the tax implications. Obviously, under a year, you're gonna have that higher tax bracket. If it's over a year, you'll have the lower tax bracket. So be mindful of that. Take that into your decision making process. Short term, I would be bearish on Microsoft down to around this 413-ish area. And then I would be long again. So depending on your personal outlook and your personal, I try to phrase things very carefully, your tax outlook, I guess I should say, what your long-term goals are, that would be what I would personally be looking at. If you're more of a trader, meaning you're more of someone who wants to get in and out and you day trade it, whatever, you may have the opportunity to at least realize your gains, and no one went broke taking profit. Remember that. No one ever complained about making money in the stock market. You could take your profit and potentially wait for there to be a slightly cheaper discount if you're around a full gains advantage, depending on what country you're in. But obviously in America, if you've owned it for over a year or whatever, then that would change my outlook a little bit. So it does depend on your personal case. And like I said, I cannot give buy or sell recommendations. But what I can say is short term, I would see it retracing to this 413 area. But with a near-term price target, it wouldn't shock me to see it get back to, hold on, I gotta zoom that out. 447.48 would be like my next price target I'd look at. So depending on your personal viewpoint and where you personally are, that would be my take on Microsoft specifically. You're very welcome. All right, guys, some say you need an edge to trade. Well, I like to look at things from a different angle, and that is what you will always get right here on the Atomcash angle. Have a great rest of your day, and remember, precision beats prediction every damn time. Take care, guys. Trade smart, and I will see you in 2 weeks. Bye-bye.